The report card for the Australian economy has just come in and it underwhelmed. The economy barely grew over the first 3 months of 2025 and expanded only 1.3% in annual terms for the second consecutive quarter. This is on par with the weak annual growth rate seen coming out of the early 1990s recession. With population growing at around 1.7% in annual terms, GDP per person continued to slide after stabilising in the final quarter of 2024. As we had expected, government spending declined over the March quarter and private spending was unable to pick up the slack. The one bright spot was housing construction activity, which continues to make gains and is now a healthy 5.6% higher than a year ago. Three main factors drove this quarter's lacklustre result. Firstly, the shaky handover, a risk we've been talking about for the past year. Australia is in the midst of a once-in-a-lifetime expansion in the public sector, which is propping up labour market conditions, particularly in the non-market sector, where the share of hours worked has increased to a record high. The National Accounts also showed government spending on cost of living measures, healthcare, education, infrastructure, all remain close to a record high. But as government programs reach their maturity or temporary measures expire and large-scale infrastructure projects come to an end, growth in public spending will slow and there's a risk the private sector will be unable to pick up the slack. Growth in private consumer spending has been particularly soft, with consumers more interested in saving and rebuilding their balance sheets rather than using windfalls from the tax cuts to boost spending. The longer this continues, the greater the risk of a shaky handover. Secondly, uncertainty of the global backdrop and US trade policy is exacerbating the risk of a shaky handover. Higher uncertainty and lower confidence can see consumers save more and businesses shelve investment projects. Business investment was soft in the March quarter, with investment in machinery and equipment down 3% in annual terms. CapEx expectations suggest that this will continue at least for the next financial year. The final factor was the negative weather events which hit Queensland and New South Wales, and this had a notable negative impact on the production and exports of LNG and coal, weighing on activity. So what does this mean going forward? Well, some of these factors will only have a temporary impact on activity. For example, coal and LNG exports have started to flow now that ports have reopened. The underlying growth impulse in the economy remains soft. The outcome was softer than the RBA's own implied expectations published in their most recent statement on monetary policy. On the other hand, the combination of falling aggregate productivity growth, elevated cost pressures and unit labour cost, and a still tight labour market is likely to keep the RBA alert to upside inflation risk. Given these somewhat offsetting considerations, we think the Reserve Bank Board will wait for the full quarterly inflation report in late July before moving again in August. We expect the Reserve Bank Board to cut at least twice this year in August and November to help ensure the handover is seamless rather than shaky.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.